Good day, Warriors. How's everyone doing? I'll get to the February break. A couple of markets are cooperating with that forecast. But before I start, face Warriors, ForexAnalytix analysts, management team. The state of ForexAnalytix is strong and getting stronger. That's my State of the Union address. Anyone agree with me? If not, I'm going to argue with you. The state of ForexAnalytix is strong. Okay. All right. And you know why? I'll just give you one example. Where are we? Here we go. So for the last several days, during Steve's roundup of the board, people have been asking, Aussie yen, Aussie yen, Aussie yen, Steve. And he showed it against major resistance and that the short was the best risk-reward ratio, abracadabra. Okay, and this is not unusual. It happens almost every day. So the state of ForexAnalytix Union is strong, getting stronger by the day. So getting back to the Fed break, certain markets are cooperating. Part of it was a stronger dollar, which, it's having a decent week, right? Here's where we closed Friday. It's been kind of relentless. I don't know if Ellioticians would call this impulsive or corrective. To me, it looks pretty directional. Now a little bit long in the tooth at 96.20, could have some type of break anytime, but it's going to be a break to buy. I'm a buyer on a pullback to say 580 or so. At the worst, 560. I don't think this is going to be the top of the dollar up here. Although, the euro was not an easy, you needed a lot of patience to sit with it because it was a grinding decline. I know I tried it Sunday night and got out in the 30s, and it's just been grinding, and most traders have a hard time just sitting with this type of action. So maybe we'll get a recovery here in the euro. And really what got hit hard, I'm assuming it's because of the State of the Union address. The Aussie got hit hard, turned back. This is something that Blake showed at resistance. So Steve, Blake, Grega, Andre, Amanda, Stelios, the state of ForexAnalytix is strong. Okay, so we're getting the pullback in gold for the Fed break. That was part of it. Crude really just hanging on by the skin of its teeth. Tried to break down. Now it's trying to turn. There you go, shorter term, right here hanging on a cliff. Maybe they could engineer another rally. So this is part of the February break. Even if we made another trip to new high, expecting lower levels, 50 comes into play pretty quick. This may just be a hope candle for the bulls. The S&Ps, the stock indexes haven't rolled over yet. Starting to get at new highs now. If we get a new high, I was talking about S&Ps 2725. 2740 with Steve. We almost got there. So any new high, if they could engineer it today, this was a confirmed high. We wouldn't get one. Again, back under 2708 is going to be a very good sign that correction is underway. The metals have been correcting per the February break scenario as well. Really didn't give you that much of a rally to sell. Gold still holding the lows, as is silver. I would love for it to hold and give me one more rally back to 1590, because I don't think this is complete. Maybe this is just wave A and this is some type of A, B, C. So if we get the dollar correcting to the downside, it may present another shorting opportunity in the metals. So, okay, Andre, last Friday, I believe it was, showed a harmonic pattern up here, bearish silver, caught most of that. So that was in the pips. So the state of ForexAnalytix Union is strong. So take advantage of the strength and at least risk a buck. If you don't get anything out of it, just say you're spending a buck to be in face today if you've never tried our service, so that you could have a dashboard. You don't want to drive around in the FX markets without a dashboard, driving blind. So consider this. You get all the active patterns in play, and more importantly, if you saw the interview yesterday with Ryan, he talked about the beauty of having a community and all the ideas that come that aren't always original thoughts from him, as he, moderates his room over at Forex Flow. Believe that's it. And we have that happening to 100 people trying to support each other, not trying, but supporting each other throughout the day. Much, a lot of time. Really, we have an hour of free analysis in face and then our guests, but the markets keep running after face is closed. And if you have a question, like you asked during our free webinar, wouldn't it be nice to have that question answered by not only Blake and Steve and Stell, who's in there, and Amanda, but the whole community? So being part of us actually opens the door for you to have an army behind you while you're trying to navigate not the easiest endeavor, trading FX. So with that being said, Blake, do you agree with me that the state of the union of ForexAnalytix is strong and getting stronger?
Are you really playing off the State of the Union right now?
What else could it be? Huh? Everything's about unity. If we hated each other, we wouldn't be doing as well, would we?
No, frankly, the State of the Union of ForexAnalytix is great. I'm really proud of the community that we've built.
Good job, man.
And, well, it's not me. It's everybody, and I have to. I actually partially me, because I help.
Because people feel sorry for you and want to hang out with you and give you support.
No, we built this community started way before ForexAnalytix.
Yeah, wide trade.
And really the reason why we built ForexAnalytix is kind of a soft landing spot for a lot of wise trade refugees that were, I knew I was leaving.
It's like, here we go. It is like the State of the Union. You're talking about immigration policy right now.
Yeah, I guess so. But I knew I was leaving Wise Trade, and I knew that they were winding it down eventually. And having a place where people that I've been interacting with for the last and here's the chat room, by the way, so you guys can see it. Having a place for all of us to chat back a few years ago, that was like really important to me, because I've made such great friendships with so many of the traders. So it's not just me, it was about 30 of us that really kind of put together this chat, and that's a really key component of ForexAnalytix. ForexAnalytix, the tool itself, is the vehicle that we use to deliver the analysis as it's being as the markets are moving, but really the heart and the soul of ForexAnalytix is inside the community, which is this little chat room button right here, right next to your avatar. And that's what gets you into where we're chatting and throughout the course of the day. And it's pretty cool, because like here's a great example. When you first log on to the ForexAnalytix community, there's a thing here where it allows you to get the files list. So you can go, okay, what charts are people talking about There, like some people are posting, news. Some people post pictures.
Nice.
Then there's charts, about things that people are covering. And this is one of the first things that I look at in the morning. I'm like, okay, well, what's everybody looking at, rather than going through every single message that I've missed, because usually when I get up, I've missed hundreds of messages throughout the course of the night. So I'll flip through the lists and go, okay, well, here's poly support and resistance levels, and here's some charts that people are posting, and this way I can get a good idea of what everybody's talking about. That's funny, Ziggy. So anyway, this community is awesome, and I'm proud of it because of what we've built as a community, and it's been a lot of fun. It's been a great venture thus far, and I'm glad that we all can participate, and really the true stars are the people that are in that community. And I'm in there throughout the course of the day, although I'm Skyped into my office in Greenwich. I can still communicate with everybody in the chat room, and sometimes I have to peel away for 30 minutes here or an hour there for calls and conferences and blah blah blah. But for the most part, that's where everybody's just congregating and talking about things, because frankly it's lonely when you're trading at home. Back in the in the 90s, it was there was actually trading offices for individual traders. It's nice. We all had a place to go, and but we didn't have the technology to do it from our homes. Now everybody does it from their homes, and so being at home, it's nice having a community where you can have a place to land and a place to talk, shop with other people, like-minded people. So anyway, so it's great, and ForexAnalytix has never been stronger. We continue to grow. We're not. This is a industry. A lot of people, look at the forex industry and they're like, "Oh, it's a worldwide market. No, it's so huge." Really, it's not a huge community of traders that do this every day. So we're really proud of the community that we've built around us. So hats off to everybody involved. Now let's talk a little bit about the markets and about what we've got going on, because we're really still in a big consolidation. I want to take you over to the dollar index and show you this. We had this rally off the 200-day moving average, real strong support. That kept us confined. Now we've rallied towards the resistance, or I would say triangle resistance in the dollar. I would be a little skeptical about getting too aggressively long the dollar here. I'm not saying that you should be necessarily short the dollar, but I think that you can actually look at currencies like the euro dollar and say, okay, well, we're around the support zone. It's probably from a risk reward standpoint. So if you look at, let me grab a pen really fast. If you're like, okay, well, I'm looking to find something to do today. Maybe you buy the euro with stops below the 618, and maybe you target back up above, 114.25, something like that. But being that we're smack dab in the middle, it's a little difficult right now to establish new positions in the market. You can almost look at every currency out there and go, here's the cable. Now the cable is actually getting bounced from channel support, which we talked about yesterday. This is a previous channel, and this is where we're finding support. I thought we might get down to the 38% retracement, which is 129 overnight. If you read read the basic technical analysis, and just so you guys all know, I write for those of you that are newer to ForexAnalytix and you're unaware, in the evening. In the North American evening, just before the Asia session, I write the end of day analysis for ForexAnalytix basic technical analysis. So, you can kind of really get my ideas on all the different instruments at the end of the day. Sometimes, there's more to say than others. Sometimes it's just, we don't get a lot of movement. So our analysis doesn't change. But for the most part, the end of day analysis will be pretty relevant on how I feel about the markets. Last night I was in the chat room during the State of the Union. We had a sell-off in the Aussie dollar, and the Aussie's been really the mover overnight. We had a really swift sell-off as RBA low had really backpedaled and said that the next move in rates is more evenly balanced, and they led us to believe.
So Blake, they basically they had their meeting, made their decision, and then a day later they're talking again.
Yeah.
That's pretty weird.
Well, that's typically how they do it. They'll have their statement, and then they'll have the presser the following day, which is
I see, the following.
Yeah. Okay. So it backpedaled some of the ideas that everybody was thinking that that their next rate move may be up. Now it's more of no, it's balanced. They could argue either direction, so the market didn't take that too well.
See, I thought it was Trump's speech. He sounded pretty tough on China in the speech, but
no,
okay,
it was Lowe's comments. What's up, Stelios?
Hey, I was just going to add that their forward guidance did say explicitly that the next move was going to be up, and they removed that. So that's that's what moved things.
Yeah.
Okay. And so the market was caught off guard, and I think there's a lot of things that are playing into this this move currently in the Aussie dollar. But I think the fact that we still don't have a deal done with China is probably weighing on the Aussie a little bit. But as I told you guys yesterday, if a deal gets done, I'm selling the Aussie as soon as a deal gets done. So that is like my trade number one. Now, Mnuchin and Lighthizer are headed to China this next week to have more negotiations. So we're put it this way: we're nowhere close to a deal with China at this stage in the game. And like I said, when a deal gets done, the Aussie pops, I'm gonna fade it pretty quickly. So that's like my number one trade on my list of things to do when or if that happens. But what do you do with the Aussie right now? In my opinion, you don't do much, because if the euro does show a little bit of a bounce, if the cable shows a little bit of a bounce, the Aussie could stabilize down here somewhere above the 71 cent level. I think if we get below 71 cents, that's going to really start a move down here would really really catch the market off guard, I think, because then you'd have a false breakout over here. Whoops, didn't want to do that. You'd have a false breakout over here, and then a big reversal. So I don't know why I have to put it in stay in drawing mode. Okay, let's talk a little bit about the Kiwi now. One of the things that I've been looking at the New Zealand dollar is not so much the New Zealand dollar, it's the New Zealand yen. We came out of a descent or an ascending wedge yesterday. Obviously, there's a pattern in play regarding that that happened yesterday. So the New Zealand yen, rolled out of its ascending wedge, which is a bearish event. We should come back and revisit these breakout points here. There's a lot of support down here. You can see it all the way through here. Could be anywhere between that 50% and the 618. But I think the New Zealand yen is going to eventually come under some pressure here. Also, the one thing that I do want to state as well is the S&P continues to grind higher, and the S&P is probably in a very similar situation. The New Zealand yen is we're in an ascending wedge as well. You could view it something like this. And I think we have to start being on the lookout for a reversal here in the S&P. We have extended our these gains quite extensively, and we could still see 2,800, but I'm really actually more on the lookout now for a reversal. I'm not going to get too excited about any type of reversal in the equity markets unless the S&P trades back below 2,700, but I am on the lookout for that. And we're starting to see signs of of potential stress in risk as it relates to the currency market, because what you're seeing here is a failure of the dollar yen at the 110 level. You're starting to see some of these commodity currencies like the Aussie and the Kiwi come under pressure. Even the emerging market currencies like the peso, you can see the peso's under a little bit of pressure. Now we have Banxico rate decision tomorrow, so even though I'm long the US dollar Mexican peso, I'm still very much aware that we have to get past tomorrow's rate decision before I get too carried away with being long aggressively the US dollar Mexican peso. I've got a starter position, basically a little less than half size position for me in the dollar mex, because I do think it's going to break out to the upside. I am looking to add. What I'm hoping is going to happen, and this is a hope. I don't trade on hope. I've got more of a, there are a couple of different reasons why I'm trading the dollar Mexico long, is because I think that the Banxico is going to be a little bit more dovish tomorrow because of Pemex is specifically. I think that stocks have pretty much run their course to the upside. Somewhere around here, I think we're going to turn, with whether it's here in the next 30 to 50 handles, and I think that the dollar Mexican peso has stopped going down as a result. So this is kind of leading us to believe that risk aversion is probably closer. It's more around the corner, more sooner than later. And so what I'm hoping is going to happen today is that we get a little bit of risk off. The dollar Mexican peso rallies, then it back tests, and then I can get long aggressively for this move. So I'm already, but like I said, I'm already, inching my way into that trade, and have been all week. So, and I've been kind of playing it too. I bought some dips at 1903 yesterday. I sold a little bit this morning at 1911. So I've been kind of chipping in and out of it. Just trying to book some profits here, pick up some on the cheap. I've been doing that throughout the course of the week. So one of the other currencies that I found really interesting is, now if you use ForexAnalytix, or let's say you don't use ForexAnalytix, but you read the blog, one of the charts of the day 2 days ago was the US dollar Swedish krona. Okay. And this is a bull flag pattern. We challenge resistance, but it's a bull flag pattern. Today we're breaking out higher. Now, if you are bearish the dollar, so if you think the dollar is going lower, I'm going to stop you for a second and say, take a quick look at the US dollar Swedish krona, because this thing is signaling that the dollar index is probably going to continue higher. That's one of the things that's prohibiting me right at this moment from buying the euro at these prices, because I look at the euro and I'm like, oh, well, maybe I should, get long the euro down here and, try to play it off of that, sub 114 level and play it back up to 114 and a quarter. One of the things that's got me a little hesitant is this US dollar Swedish krona. That is a big breakout that is brewing. And also, if you look at the US dollar Norwegian krona, we have broken that trend line, that downtrend line, which is, also suggesting that we might have some upside here. So I would be a little careful with the dollar as far as trying to step in front of it at this point. I'm not a dollar bear. I'm one of the things that's the only thing that's going to turn me into a dollar bear at this point is if we break below the 200-day moving average in the dollar index and through this support at 95. You can see I've got alarm set. I can actually move that up a little bit.
King dollar, king dollar, king dollar.
Well, there's a lot of reasons why I don't really want to be a dollar bull, but I have to be proved. I have to have the market prove to me that I should be a dollar bear. And right now, because I can argue. I hate it when I can argue either situation. Yeah, I can argue both sides. I can argue the dollar bullish argument. I can argue the dollar bearish argument, and I hate it. So that's when I have to turn to the charts and say, okay, the charts have to really prove to me what I should, you know, which argument I need to take, which side I need to take. And right now I don't, like I said, I'm not a dollar bear. However, if we broke below like 95 in the dollar index, I would have to go with the bearish arguments right now. You know, I think the risk of some possible risk off and the dollar catches a bid as we get some risk off activity, and I think Europe is really slowing from a macro standpoint. You know, I think the risks are for a higher dollar at this point. I see that argument pretty clearly at this moment, but that doesn't. The charts aren't telling me I really need to be a major dollar bull at this point either. So, but
if it breaks out of that triangle, would that be enough for you to go with your arguments?
That may, and there's a couple other things which I'll leave for the blog post that's getting published this morning regarding the dollar. So be on the lookout. Yeah, we have a
great one.
We have Grega, Stelios, myself, you know, and Steve has contributed to this blog post, and possibly
I want to read it.
And with that being said, I'm going to pass it over to my colleagues, Steve and Stelios. Good morning, guys.
Good morning.
Hey.
Good morning.
How you guys doing? The Steves.
Well, it's raining cats and dogs here in Athens, as they say in England.
You know, we've had a lot of rain too, and I think Dale passed it over to us. So
yeah, it was deluging here almost every day.
Yeah, so we're getting our fair share too, way more than we normally do. So, which is good for the desert. We'll take it. But I hope you guys have a great trading session, and thank you everybody who makes ForexAnalytix the community it is. And for those of you that haven't, visited our sponsors, Forest Park FX, make sure you do so. Steve will show you how to get to them. But if you're not getting ForexAnalytix for free, or if you're not getting paid cash back rebates on your trading, then I don't know why you wouldn't. So make sure you visit our partners for the webinar, because they'll help you out. They're that they're gonna point you in the right direction. There's no reason why you shouldn't be getting ForexAnalytix for free. Okay, unless you're in the United States and the only thing you can get is cash back rebates. But why not? Okay. All right, I'll let you guys go.
All comes out in the wash.
Thanks, guys.
Yeah, man. You spent a lot of time talking about the community, and I agree with everything. I just wanted to remind everybody that they will also have an opportunity. Those that are in the U.S., especially those that are close to the eastern coast. We have the New York Money Show, 10th, 11th, 12th of March, and we're going to be there in New York. We're going to have a booth, and people are more than welcome to join us. We're also going to have a get-together. So just let us know if you want to attend. It's free. Okay. Thank you very much. And here's, by the way, the reimbursement program page. You can contact here Trent, Justin. They can guide you in making the best decision having to do with your choice of preference, having to do with a brokerage deal, brokerage firm, based and according to your needs and type of trading account, etc. I'm their client, and I have to say that those guys are pros. Stelio.
Yes. We have some numbers to the US in 45 seconds. Before that, I can mention that we had yet another disappointing German number. Factory orders came in at minus 1.6%, expected plus 0.3. And this is, this is just another one which is showing that Germany is no longer. It's. As with every country, they have their ups and downs, and they seem to be now slowly turning. It's been the locomotive of the Eurozone, and when Germany goes south, then the whole of the Eurozone usually follows. But
we have, by the way, a lot of US data coming out, correct? From building permits, durable orders, core retail sales, GDP, etc., etc. So let's have a look of what's going to happen.
The State of the Union is strong.
Yeah, from what I heard, we're going to abolish AIDS, cancer, meningitis. What else?
Yeah.
Are we sure they're coming out? Because the calendar is showing as tentative and not, well, nothing's come out. So maybe those have been postponed as well. Yeah. That's shutdown.
The state of the news is spotty.
Yeah, actually, we only
you know what?
The
eye of Steve Bulgy is exceptionally sharp. Great call on Aussie yen.
Thank you, because that's actually what I showed today in the morning in the chat room. Because
you've been showing it for free space for about 3 days now.
Yeah, I like yen to the downside. We had a nice confluence of resistances there, and I think that just by judging from today's candle, you can see we've already engulfed 5 days of price action. So that tells you all you need to know. If we close below this channel, I think that this is actually my preferred trade at the moment after today's move. Aussie yen to the downside, I think it looks very appealing. You have a clear risk-reward ratio. I think that any retracement to 78.80 is going to be like a gift having to do with a risk-reward opportunity, because you can never be sure, or you can never guarantee to anybody that a trade can work. The only thing you can be sure about is if something is an appealing opportunity or not. And in my opinion, this is a very, very appealing opportunity.
Yeah, that was a Top Gun. That was a Top Gun call.
Thank you, Coach. Stelio,
you're like Tom Cruise.
We did get some of the data. We got trade balance, which was somewhat better, right?
Yeah. The revision somewhat lower, the headline somewhat better, and we got some exports and inputs. I mean, that's fine.
Yeah, and we also got good numbers from Canada. That's why we're seeing a pullback in the USD CAD. We got building permits in Canada. They were up 6%. We were expected to see a number of minus 0.9. Instead, we got a 6% higher number, and that's pushing USD CAD a little bit lower. Now, I don't have a position anymore here. I got stopped out in profit at 131.80 in this rebound. So I still believe, though, that there is, as long as we stay above 132, I still believe that there is a possibility to see one more leg lower towards 130. So I don't think that necessarily, this move lower is done and that's it. I wouldn't be surprised to see one more push to the downside, in which case I might even be looking to take the other side of the market. Now, Coach, you spoke about Aussie yen. We have to say that after the move that we saw lower in the Aussie, we have three things that have happened of importance. I mean, one is that we got Aussie yen and even Kiwi yen. I mean, in sympathy, it also pushed lower, not as much, of course, as Aussie yen, breaking below. Let me show it here on the 4-hour chart. Aussie yen, you can even see the rebound as a pennant in essence, as an ascending wedge. We broke below it. And if you see Kiwi yen, technically speaking, not that strong, but it's showing, the same kind of move. Now, on the other hand, we also got a breakdown from this ascending trend line in the Aussie USD. So this increases the probability that we've seen some kind of a significant high here. I want to see a little bit more evidence, but it definitely increases the possibility. But also, we got another technical event. I'll go back to daily, and that is we got a breakdown, which I expected in the Aussie Kiwi. I kept saying that this move looks corrective to me. And I think that we're going to see a push towards parity, and I think that most probably this move that we're seeing today is a confirmation that we're going to resume to the downside from here. So I do think that Aussie Kiwi is on the move again, and I expect that the chances of a continuation lower are significantly high. So Aussie Kiwi on its way, as I said, and those pairs look quite attractive. Now, obviously, the move that we saw in the Aussie also created some nice rebound moves for the Euro Aussie. A very nice rebound from a horizontal support area. I expected that if we got rejected from there, we would move further down, but instead we punched through it. So now I want more price action to determine what's happening from here if we found actually a significant low. And here is Euro Kiwi. Euro Kiwi, anyhow, the pullback was more orderly. So it's not that I'm really surprised about a possible rebound in Euro Aussie, in Euro Kiwi. Sorry, but keep in mind that with the dynamic that we have now in Aussie Kiwi and its resumption lower, whenever you're looking for weakness in one of those pairs, you should go with Aussie. Whenever you're looking for strength, which you shouldn't be looking, but anyhow, you should be looking at Kiwi. Let's also have a look at EuroCAD, since we're having a look at the crosses, not that it has anything to do with the Aussie. As you see, EuroCAD, came back, retested this horizontal support area and this broken trend line. I want to see what's going to happen from here. I wouldn't be surprised to see a rebound from this area. RSI has also completely worked out the overbought conditions, so it seems to try to bottom out here. So I want to really see what's going to play out from here, and specifically, let's actually now fib this and see if this is also some kind of a worthwhile fib area. Yeah, it's more or less 78.6 is there, right? There it is. So I think it's a nice possible confluence. So if I see a continuation from here, today's candle already is trying to put on a reversal. I'm going to be monitoring it because it doesn't look that bad. Having said that, I would really not be choosing EuroCAD to be long the euro. In general, I wouldn't be looking so much to be long the euro. But if I did so, EuroCAD would not be my first choice. But anyhow, having a look at it doesn't hurt. Some of you might want to trade it. Now, pound Aussie, very, very nice reversal. Actually, I was monitoring at this ascending channel here. Yesterday's price action was looking like it would signal more downside, but we stopped exactly at the 200 daily moving average, and a very impressive rebound of it, which definitely invalidates this breakdown. And we're currently testing already resistance. You can see this support resistance area. So I want to see what's going to happen from here, but this huge candle to the upside definitely should put a pause to any thoughts of selling the pair until we see what kind of a rebound is that. Is that a like a violent one day reaction, or is it something more than that? Now, pound Kiwi, although more orderly, it had also made a move lower from there. So I want to see if now we're going to get rejected from this previous area of support acting as resistance. More or less the same deal as I said with pound Aussie. I want to give it more time so we can see if perhaps we should be looking at some other type of formation. But I would be remaining cautious in the short term here. Now, let me also open the question box so I can see There is something. A question about USD CAD. I had already covered that. Yes. The rest of my position got stopped out at 131.80 for profit, for roughly 100 pips of profit. Okay, thank you for your kind words. AMLO will announce a tax reduction for Pemex today or tomorrow. Yeah, that's good for them. DXY triangle pattern. Yeah, it looks like it, like a big triangle. Steve, can you please cover the USD ZAR in particular? Absolutely, I will do so. Swissy holding above parity. Anything? Yeah, as I had said, the Swissy from a technical perspective, and then I'm going to go to USD ZAR, looks quite appealing, right? This is one of the reasons, the main reason actually, why I preferred more weakness in the Euro USD than anything else. Although, as I said, I wouldn't be trading the Euro USD. You'd rather trade the USD Swiss. So yes, it's trading more or less at parity now. And, I wouldn't be surprised to see more upside here. And this is also, I mean, the technical picture in the USD Swiss is also one of the reasons why I'm still in favor that, of the possibility of seeing a downside break in the Euro USD. And in essence, I agree with Blake that despite my long-term bearish view on the dollar, I can't be bearish the dollar here. I mean, looking at the DXY chart, looking at the Euro USD chart, looking at some of the other charts, I really don't see some imminent USD weakness coming through, right? So, I mean, the vast majority of the charts show me a higher likelihood of seeing some strength in the dollar, or the weeks ahead than anything else. So I wouldn't be surprised if Euro USD ends up breaking to the downside as well. I'm not going to be trading it because it's moving so slow and it's so uninteresting that there's absolutely no reason why I should be investing capital here. Why shouldn't you just be long the USD SEC or the USD Swiss or the USD SEC? I mean, Blake showed it as well. Don't forget that this is also a proxy. I mean, it's very often correlated to the Euro USD, and today it seems to be breaking out. We've been monitoring this triangle for a long time, and as you see, because sometimes that is important, we're not only seeing a breakout in price, but we're also seeing a breakout in RSI, which increases the chance that this is likely not a false move, but rather an actual breakout from a mature consolidation, right? Of course, you'd rather wait, until the end of the day, but it looks quite real to me. So next upside target is, significantly higher at 944 and change, the previous high. So I think, there is a decent chance we're going to make it there. We're going to be trading there. And if USD Swiss, which looks good to the upside, and USD SEC do push towards, targets, I can't really find it easy to believe that at the same time the Euro USD will not have been also breaking down from the equivalent channel that it's been trading. Okay. Yeah, USD ZAR. Let me not forget this. USD ZAR. There it is. USD ZAR, I have to admit that the move lower really doesn't look that bad. I mean, it looks to me like a very orderly move, and I would really not be surprised if we actually start pushing higher here as well. And this also goes well with what I said about potential USD strength. So, if we see a breakout from this triangle, I would be looking for a continuation higher. So
how about gold, Steve? There's a big mining is a big part of their economy. Could it have anything to do with gold and natural resources in USD ZAR?
it can play a role, but other things, for example, don't forget, there is a lot of unrest in South Africa, right?
And, yeah, I've
interviewed
some South African guys, yeah.
Exactly. So specifically, if we're talking about potential South African rand weakness, there are a lot of potential reasons that can happen, right?
Right.
I'm not an expert, and I'm not closely following developments there. It's not that I every day, read South African news, but the situation is, is quite volatile, and anything having to do with weaknesses is on the table, right? Now, having to do with gold, a rejection so far from the 78.6. As I said the other day, I want to see more than that to say, oh yeah, that's the top. I mean, that's the high, because I have to admit that if we just see an orderly move back towards, let's say, 1300 area, the 1300 area, something like that, like another little wave lower, I wouldn't be surprised to see one more push to the upside following that, and then, like a bigger failure. I wouldn't also be surprised to see that this is some kind of a more significant top, but I need to see more momentum to the downside, because so far it's absent. Silver started with quite more momentum than we initially saw, but it has also started stalling, as you see. I mean, we had quite a strong second day lower, but we pared back the losses, and then the day before yesterday we got a spinning top. Yesterday we moved lower, but in an orderly fashion. So I'm still monitoring this ascending channel in silver and this horizontal support before I can also say that this is it with silver, because
silver's been a bit weaker though, Steve, hasn't it?
Yeah,
and on the gold silver ratio chart, it looks like we're getting some type of bear market rally.
The gold silver ratio, we in essence rebounded once again from the same area, still being supported very nicely from the 200 daily moving average.
It wants a right shoulder up around 85, maybe.
Yeah, like for a head and shoulders formation there, absolutely. But regardless, especially if that transpires, what you described, that means that more time will pass, which means that we're going to be getting closer to having this very long-term ascending trend line converging with this horizontal area, in which case then that 81 and a half area is going to be extremely important as a technical support level.
Okay, so, I'm through interrupting you for this session.
No, then there's absolutely no problem. I have no problem with interruptions. It makes for a live conversation, right?
Okay, all right. I'm muting me.
We're not among strangers, right?
Right, I'm muting me, buddy.
No need to do so. You can interrupt me as many times as you like.
I might burp, so I have to do it.
Okay. Okay, then. Okay, so nothing has changed, by the way, with platinum. Platinum remains one of the weakest ones. Here it is. So, if we see some weakness in metals, I think platinum is going to be the first one to go. And palladium remains the strongest by far, still within this ascending channel. So nothing much has changed there. But what is getting closer to becoming very interesting is copper, because copper is now also attempting to break above the 200 daily moving average and coming even closer to this 286, 287 resistance area, which is going to be key, because it's going to be the area of a very well-defined rectangle. You can even view it, if you wish, as a double bottom. And we know that the target, if we get a breakout from that, is going to be it is going to equal the height of this formation, which is going to be another 30 cents roughly to the upside. So I think that's going to be quite a nice trade. So the closer we get to there, the more appealing it becomes to try to fade it, as long as you know that if we do break out from it, you have to reverse that trade or just exit it completely. It's totally up to you, because I think that a breakout from here is going to find some decent follow through. What about emerging markets? BRL, MXN, INR. Okay, let's take it one by one. USD MXN. USD MXN, it's not going to be out of the question to find out that this is some kind of a bottoming formation. But as long as it, looks like a triangle as much as it does, I wouldn't be surprised to see one more push lower, right? Towards this long-term ascending triangle support line. So I have to say that I would be from a technical perspective, I would be quite careful buying the USD MXN here unless it breaks above 1925. Okay, and still depends on the fashion of that rebound, because this might not be a triangle, this might be like a plug, right? Something like that. So until that happens, I wouldn't be ideally, I mean, from a technical perspective, I think that the perfect resolution for that would be to see one more push to the downside towards this trend line, and then like a bigger reversal higher. Okay, so ideally, if I had to to say how technically it would fit best in my mind, would be this kind of a move. Breakdown lower, trapping a lot of people short at the very wrong time, and then a reversal that's going to take out the weak hands and probably going to fuel a stronger upside due to that. Now let's have a look at the USD Turkish lira, which unsurprisingly we said that this rebound looked quite weak, so I expected that we might have another leg to the downside, and we do seem to be breaking below it. And along with that, keep in mind that we're also breaking the 50 and the 200 daily moving average. So I have to say that the USD Turkish lira so far looks, as it's remaining on the weak side. So that would not be the preferred choice, to be long the USD in comparison to other currencies. But on the other hand, I have to admit that we're seeing a nice rebound for the USD Chinese yuan. Everything that you would wish is here. I mean, we had a horizontal support area. We had the 38.2% fib, and then we got exactly on that area a morning star formation. Okay, so all of that would make me very, very cautious being short here. BRL, actually, something, I'm not even sure I have much here in the BRL. Okay, last time we had a look at the BRL was here. So I said that I would expect after this move lower to see another leg to the downside and then a push higher. As I've said many, many times, assuming a correction is not easy. So the corrective move here instead was something like a triangle, a rectangle. We did get that one move higher though. And as you see, this area, this horizontal area that we're rebounding again from is quite significant. You can even view this as head and shoulders formation, right? I mean, you can even look at this like this, right? Which means that this 364 area is very, very, very important. And don't forget what I showed the other day. I gave the example of how head and shoulder formations are very often masquerading to be, or masking, triangles. So for example, a lot of people can look at this and say, oh, this is an amazing head and shoulders formation. I'm going to jump in the market in advance, like here or whatever, to make a nice profit. But don't forget that we had a breakout from there, and there is also the potential that this is simply, I'm going to put some short-term drawing here, this can simply prove to be a bullish triangle, right? So don't jump the gun unless we see a breakout from this kind of a trend line, right? So either trade it to the long side if we see that, or to the downside if we do see the neckline break. I think those are the two potential ways to trade this. Now, until that happens, and as long as we stay within this area, I think you should rather wait a little bit more to see what's coming. Now, let's have a look at the USD Indian rupee as well, which is attempting to break above this trend line, in which case I wouldn't be surprised to see more strength, simply because it's clear that we have been for a very, very long time in an uptrend, right? You can see it here. So you have to always respect the potential that these kind of moves lower are corrective. I mean, your first approach should be that those moves are corrective until we actually get a big reversal in hand. This move lower did seem quite orderly, and look at this. It found support at previous resistance. I mean, we tested this area multiple times as resistance, and once we broke above it, unsurprisingly, this exact same area acted as support. So the path of least resistance for the USD INR is undoubtedly higher. USDs are more political, I think now, uncertainty around the election, Zach says. Yes, as I said, there are a lot of issues in South Africa, and absolutely they can produce more weakness. We have a question about Euro Swiss, so let's have a look at it. Coach, do we have an interview today? I'm guessing we do.
We do, Steve, and Stephen Mathai Davis is in the house.
Okay, perfect. Now, if you remember, we had a friend here that was long the Euro Swiss, and he had a target at 114.90. I remember that a few days ago.
Nice.
I hope he followed my advice. I told him that he should book some profits here in this horizontal resistance area, because we have the 200 daily moving average. We also have previous support resistance in this area, and I said that this is a key level for me. We drew that if we breach above that area, then you should expect more strength towards 117. But if we fail from this area, we can even move back lower. So we are seeing a reaction from this area, and obviously being long exactly at resistance makes no sense. Of course, this might prove to be just a short-term reaction from the market, and we might end up breaking higher. But as I said, you want to do something with it right here, right now, you're short against the highs. That's what makes sense from a risk-reward perspective. Your other alternative is waiting for a breakout from this 114.50 area and buying that breakout, looking for a continuation towards 117. So, those are the two options you have from a technical perspective here. As simple as that. Actually, he's listening in. He says, I did. So I'm happy that you took some profits there. That doesn't mean, I remember that you had quite a nice entry point somewhere at the 113 area or something like that. That doesn't mean that you should be taking profits on all your position. You can give it a little bit more time, because this might just be a short-term consolidation and we might eventually break higher. But taking some profits there was the smart thing to do. And now, pay close attention to it. If you see some kind of an acceleration to the downside, you'd probably want to book even more and perhaps leave 1/3 of a position with a stop loss at break even. At least that's how I would handle it. I mean, of course, you're the decision maker for your trading account. I'm just giving you my 20 cents. I mean, no more, no less than that. So, Coach, if I think I covered all the questions. So if your guest is here, I think you can start 1 minute earlier.
Okay, buddy. Nice review, Stephen. Again, great call on Aussie yen. That was a trade of the last 24 hours. Good eye.
Thank you, Coach.
Okay, Stephen.
Interview.
Thank you, buddy. Stephen, I'm going to make you the presenter. Really looking forward to meeting you and talking to you. I've been to your website and took a look around. Welcome to FaCe, Stephen.
Thanks for having me on. I'm looking forward to it.
Oh, it's great to have you, Stephen. There's your screen. So, I read about your background, and, that's me. And I'd like our listeners and people that see the video later on to know a little bit about your path to where you are now, and how did it begin for you to get into the industry?
Yeah, why don't we just unpack that a little bit? I started my career at investment bank Sandler O'Neill trading financial stocks, and this was well before the crash in 2008. It was a really interesting experience. It was trading all kinds of stocks, both illiquid and liquid. This is before electronic trading really took off. So I started on Wall Street right when everything started.
When the floor was still very busy when you were there.
Yes, it was.
Yeah,
I was a guy upstairs calling down, but the floor was very busy. This is before the New York.
Right.
Okay.
The good old days.
I can talk about dark pools and how they were being installed on trading desks.
Okay,
wow. In the original days. After that, I moved away from investment bank to a hedge fund. I joined a group of Goldman bankers who were creating a hedge fund that was really going to be focused on U.S. financial stocks. And I was brought on as the young trader to help run all the execution. And it was a really interesting time because I was helping putting on a lot of the shorts that turned into these huge winners in 2007, 2008 in subprime. So I had a front row seat for everything that was going on.
Wow.
And the
really,
joke,
what a great road, and how fortunate you were on your path. You know, I'm just thinking about the hundreds of and thousands of traders that are trying to make their way now, Stephen, in the internet age, and really needing a keen sense of discernment to know what is real and what isn't. You know, a couple of the clues I say: if someone's trying to sell you the secret to trading, to run away. And anyone talking about 4-digit returns in a year, run away, because hedge fund managers do cartwheels doing 25% a year, right?
Absolutely.
Okay.
And I think some of the most important lessons you learn later on, at least I did, I'm sure you know all about this, Dale, is that the key is not to lose money. It's not always about making a lot of money. It's about avoiding those huge losses.
Yeah, you know, avoiding any loss, Stephen, you know why it's hard to measure, because it doesn't show up in your account. But avoiding bad trades really affects your performance overall, and it's invisible because it doesn't show up on the bottom line, but probably as important as being in successful trades.
Those were advice that I was given from people who tried to mentor me, which was, kid, always try to avoid the big losses and you'll make a lot of money over time. It's about
and that's something at one time we both were called kid.
Yeah.
You a lot later than me. All right.
Go ahead.
No, go ahead, buddy.
I was going to give you a little bit of a kicker. That's the story, is that, you know, on the one hand, I was helping a bunch of the ex-Goldman Fig guys short financials, and then I decided to take a break, pursue a professional kickboxing career.
I read about that.
And then I said, okay, let me come back. I want a safe job. I'm going to really focus on becoming an analyst portfolio manager. What wouldn't be safer than AIG in March of 2008? So I joined AIG 2 weeks before Bear Stearns. So I had the perspective on both sides of everything.
Yeah. Okay. So, you know, you had to overcome and be persistent. Getting back to the secret's hard work, persistence, and overcoming adversity. So, you know, it was, you know, in everyone's trading career, there are potholes and detours. And so you had a detour there. And normally I wait till the end of the show, but knowing your martial arts background, I'm going to call you my trading warrior brother right now, because I'd rather have you as a friend than an adversary. All right.
Thank you.
All right. So let's talk about Quantumize and what the vision was behind it, and what you do, and tools, and what you're looking at in the markets now, Stephen. Why don't we get to what everyone cares about, money.
Money and what's driving it and how we're trying to help people.
Okay.
Quantumize, the vision for Quantumize is that what we're trying to do is take AI techniques and multi-factor investment techniques and democratize them and just bring them to the average investor. Now, what does that mean in English? That means the techniques that are being used by some of the elite hedge funds right now to generate returns, what we're trying to do is bring it to the average individual investor who's interested in this stuff, doesn't have the tools to actually run these analytics, but really believes some of these things can help them. We're very different than some of the do-it-yourself platforms at the moment that require you to have an advanced knowledge of Python, really advanced knowledge of factor analytics and investment research, and then the ability to build algorithms. So we're crunching 10, 20, 30 million data points a day, looking at stocks, ETFs, options, and cryptos to try to find some of the best trades.
Okay, so is this an algo, or did you guys code it? It's proprietary. Did you develop it? Did you develop it? You have the no? Because that would make I couldn't do it.
I developed it with our team. Together we developed it. Everything's proprietary.
Do you need a lot of computer power to run them?
You need a massive amount of computer power. Let me give you an example. We have there's a lot of noise right now about what we're doing with ETFs. The amount of computer power I need to run the ETFs, I cannot run it on AWS's server any longer. I have a 72 core supercomputer on AWS that I use to calculate some of our crypto data. I can't even run my ETF stuff on that anymore. It's just too many data points.
Okay, I just got a Skype that your personal email may be up on this page that you're showing, in case you don't want to show it.
Don't see
anything bother you? I mean, you know, you're an open book like me. Okay, so you know, most people probably, yeah. Anyway, so you're running these algos. You need huge computer power, and you know, with what's going on in the markets now, the huge recovery that we have, do your algos just spit out trades, spit out biases? Is it on autopilot like a robot? How does it work, bro?
How does it work? So taking a step back for a moment, what we're doing is we try to segment stocks into different categories, right? So let's just look at what we're doing with stocks at the moment. We take the U.S. market and slice and dice it up into U.S. large cap, SMID, micro cap. We slice these sectors up into consumer discretionary, staples, tech, industrials. And what are we doing when we do that? The idea really is that each market is different and groups of stocks are not homogeneous. So a
lot of rotation. So you try and stay on top of the rotation from sector to sector.
Sector to sector, as well as looking to see what are the individual factors driving SMID cap versus large cap, or what's driving tech versus consumer discretionary.
Okay.
And when we did that, what we found is that we discovered that different factors drive U.S. large cap stocks and SMID cap stocks. Now, how are we coming up with these factors and what makes us different? We're actually using AI to find these factors. We're a little bit different than a lot of other shops. You know, the holy grail right now with AI is to use AI to predict asset price moves. And I think that might be answering the wrong question. The more interesting question is, can you use AI to predict the factors that are going to predict price moves and then use those factors to predict price moves? And that's what we've done there.
Okay. So you know what? Your AI is also kind of a mentor, and it's pointing your eye in the right direction to where do you get involved in the trading decisions based upon the information you get from AI, or does AI, is it automated just to take the trades it sees, even though it's giving you the factors?
It's automated. The whole process is automated. It's all systematic. Okay. There's no human intervention at all.
Okay. All right. So what kind of messages are you getting on different markets right now from your algo and your AI? What are you seeing? I know it changes day to day, but are there any general themes after this recovery from after Christmas to where we are now, and any sectors popping out at you, perhaps oil or the gold shares have been on a bit of a run. What are you guys seeing that may have some legs and staying power as far as trends? right
yeah,
now.
Why don't I talk stocks initially, and then I can quickly go to ETFs.
Sure. Okay.
With stocks right now, what we're seeing is consumer discretionary stocks seem to be very attractive. I was interviewed at the beginning of the year on the Money Life show, and they were asking, what do you think some of the best sectors are going to be? And I'm a trained consumer tech analyst, but on a fundamental basis. But looking at the AI models and what our factor models were suggesting, it was undoubtedly clear that investors should be skewed to consumer discretionary. And that's been one of the better trades to start the year, being long cyclical.
Okay.
I would say right now, some of the sectors that may be looking interesting to us are utility stocks, given the fact that they've structurally underperformed over the past, I would say, 30 to 40 days. We continue to like some consumer discretionary. And then within tech, this is a little bit contrarian, but we're actually warming up to semiconductors, which have been some of the worst performance, one of the worst performing groups. Can you see my screen right now?
I can. So actually, you know, I look at the ETF SOX, and it actually took out the lows, which would have been taking out the highs. And I know there's other factors in there, but it's actually been semiconductors based on SOX, where you don't have like, say, FAS making new lows, or SQQ making new lows, or TZA. I'm talking about the bearish ETFs. SOX actually has fully retested its whole advance, which the advance was based upon negative action in semis.
Sure.
So that is a sign of strength, right? I mean, you know,
I would definitely argue that. And let me tell you some of the other things that we have behind it. If you look at SOX, you're talking about pure technicals. We're actually bringing in sentiment data. We're bringing in data from the options market, which is really insightful for stocks. And it's not talked about a lot. And when we talk about options data, I'm not just talking basic implied vol. We're looking at skew. We're looking at implied realized spreads. We're looking at different measures of realized volatility, not just your end of the day vol, but intraday vol trends, as well as Garch type measures of volatility.
So, do you look for clues in the option markets when you get huge size, it's unusual option activity? Is that also a tell in your work? Because you really don't need AI to notice that, but do you still pay attention to that?
Two elements. You definitely don't need AI to do that. And if you're a really savvy options trader, that's usually a contrarian signal.
Okay.
Two, we actually do look at that type of stuff. And those are some of the factors going into our ETF models.
Okay. Thank you, Stephen.
And right now on my screen, I hope you guys can see this.
We got
I've
it.
actually brought up the sector signals, since we were talking about sectors. Right now, we've broken it down by provider. We're going to be changing this to the point where it's going to be broken down by actual individual sectors. And what I'm seeing across the board is a bunch of buy signals, which is the first time we've been seeing things like this. I would probably say in about a month. In the past, there were a lot of sells with a real skew to consumer discretionary.
Okay.
But here's an example here. We're looking at our consumer services. This would be a very interesting type of ETF. Flows are negative, but look at the dividend yield. It's 88 bips, and it's a buy signal on a trading basis. Our smart beta score, this is not to be confused with our trading signal. That's looking at relative attributions. This is a really radical product. What we're looking at is what are the actual attributions of a stock, and what's really the beta in there. So if you were to say, listen, Mathai Davis likes consumer, I'm not just going to go off AI trading signals. I'm going to go look to see what's the right ETF for me. And there are many people who may do that. Well, I would argue at that point, there's quite a number of consumer stocks. Where do you start? Where do you end? Now, if you don't believe in using trading signals, maybe what you should look to see is what's really the attribution or exposure of your ETF. Nobody's tried to answer that question for individual investors. And it's still very complicated for institutional investors. What really is the portfolio?
A lot of people trade them and don't even really know about them. I'm talking about myself.
Well,
I trade them, and I haven't really broken down. So I learned by experience. It's like VIX ETF products. I learned by experience. So all the decay and all those things. So yeah, you're right. Buyer beware. Do your due diligence. And this is something else. You help people understand the composition, the advantages and disadvantages of the ETFs that you're talking about.
It's fascinating, Dale. No one's ever really tried to help people understand what they're buying with ETFs. It's just, here are the fees, here's the AUM. Yeah. Well, that's not enough. Usually what you really should care about, and your listeners should care about, is the attribution. Like, what's actually driving this ETF? Do I really want to buy it? So our idea was, with our ETF product, was, let's take a step back. These multi-factor models have been awesome. I didn't talk about the performance, but they're through the roof. Like, just give you an idea, last month alone, our top buys that we're recommending to people were up 9.5%.
Nice month. Nice quarter.
Yeah, perfect.
Nice year.
Nice. Just at that point, if you're a professional business, just index it and don't do anything. That's been the joke with my team. But if you have great models that predict pricing, you can create models that at the same time that tell you attribution. That's simply what we've done here. So let me walk you through. Can you show us
an example of attribution on one of the ETFs and what you mean by that?
Yeah, sure. Do you see my screen right now with the these ETFs up here?
Yes. Yeah.
So let's look at Amplify Online. So this is, our models are saying this is the best consumer one. And now why is it saying that? It's neutral on quality value, neutral on growth. But look at that. It's overweight low vol. It's overweight size, which simply means that it's owning small stocks, but it doesn't look good on technicals.
Okay, and these are the attributes of that particular one. Okay.
Now, you'd say, all right, this is really interesting. They're saying it's the best. It's got a 65% expense ratio, which makes it one of the more expensive ones. But now let's look at this. Now, we've put together this window. Let me make sure it's easier for you guys to watch it, which tells you some basic data about the ETF.
Okay.
What's the last price? All this stuff is real time, by the way.
Nice.
That's what Bazinga is calling us, the Bloomberg for the average investor. It's just something that's coming out later on this week, excuse me. You have fund flows data, you have AUM, but let's say we want to learn more, because this is a small ETF.
Okay.
Now suddenly you have some basic information data, and you're going to love the chart at the bottom. Tells you a little bit about it.
Yeah.
Let's look at how it's done.
Tells you everything about it.
Yeah, well, you see this. Let's start adding a few of these guys. I'm just randomly adding a few. How's it done? Wow, it's not too bad. I mean, look at this, right? Online retail, look at China consumer. I just chose some random ones, but we take the entire peer group and you can do whatever you want there.
What a great intelligence gathering site you've put together for people that are interested in, really in stock. And you also apply these ideas in option trades, correct?
Absolutely. I'll show you the option.
Is that your niche? Would you say that that's your kind of your bailiwick, is your options work?
No, I'd probably say it's a mixture of the stocks, the ETFs, and the option. Okay. But let me walk you through this.
Okay, go ahead.
You got exposures. You can drill down on holdings. If you want to learn more about it, suddenly you go to our landing page so you can see what's going on here with Netflix. This sentiment data, I'm now kind of skimming it so we don't waste too much time on it.
Yeah. Do you have like a tutorial to teach people how to interpret all of this? Is a lot of data.
Yeah, it is.
So, it's not that people have to learn how you come up with the data, but just how to interpret it and use it. So what do you do? Do you have a community, a chat room, or tutorials? How do people get the feel for navigating and getting the most out of your research?
Well, there are going to be three elements to it. If we've created a robo chat here where you can interact with us, and it's almost like your internal wiki. Type in any question, anything is going to be answered, including videos where we update you on what's new on the site. We've created this online tutorial system where if you wanted to get walkthroughs on how to use things, as well as a welcome to Quantumize.
Okay.
We walk you through everything. We're going to begin hosting webinars where we show people how to use the platform, because what we've tried to do with Quantumize, and I don't think I said this in the beginning, Dale, is really create this awesomely powerful database. Nobody realizes yet, but the entire S&P global database is powering Quantumize. You have access to the entire S&P global database. On the ETF side, you have access to the entire ETF global database. That's over 3,000 ETFs, and we can drill down into flows, fees, anything, performance data.
Okay.
But let me talk
so
about.
So it's really like a platform.
Yep, it's there to help people really discover their next big investment. That's our tagline.
Okay.
We're here to really help you here, and it's completely transparent. And what makes us
do you guys manage money as well, or your portfolios, like your model portfolios, are like simulated and recommended on the site, but you're not managing money or are you showing real-time trades that your systems on autopilot are executing?
Well, we're showing you the real-time performance of trades, but they're all simulated. We're not putting money to work because what we're trying to do is not create a conflict of interest. What we tried to do, endeavor in the beginning, was to create a system or a platform where there was no conflicts. So we're a bunch of former buy-siders, whether it be the chairman, who happens to be my father, by the way, who ran some very large asset management companies, to obviously me, to our options partners team, who are really elite options traders and portfolio managers.
Okay.
So everyone's background is pretty extensive on the buy side, but what we tried to do, at least for the individual investor, was remove all those conflicts.
Okay, I got a question from a viewer. Is it possible for people to trade off this platform, or they have to go to their broker and trade off that platform?
Right now, they have to go to their broker to trade off that platform. We're in the process of integrating into several different online brokers, as well as integrating brokerage connections, so that, for example, you see these options trades and you really want to execute it. Listen, I mean, the returns are through the roof, but it's difficult. I don't want to have to go in and put in a long call spread collar on Apple.
Condor. Yeah, or Condor.
Yeah, Condor's I trade them. Yeah. It's just a pain.
I'm an eagle. I'd rather be an eagle than a condor. Go ahead, buddy.
But imagine the technology, just your listeners right now, just to click a button, and suddenly it's going to populate for you on your brokerage account, and then you execute it. Just imagine you sign up for a text message. You want these awesome trades that I've put up here. How do I get access to it? How do I get alerts? Imagine just getting a text message now, clicking it, and suddenly it populates your mobile app. We're not taking commission. We want none of that. I mean, if you want to cancel this, cancel whenever you want. We'll stand by the trades that we put up.
Okay.
And I think one thing that's important to really highlight about us, Dale, unlike everybody else, we tell you what the performance is for stocks, for options, as you can see right now up on the screen. Cryptos, our stock model portfolios. We create portfolios for people.
In crypto.
And crypto. And by the way, we create crypto portfolios too.
Wow.
As well as trading signals.
Okay, let me ask you about it. Obviously, you think it's a viable asset class, or you wouldn't be doing this despite 80% declines in Bitcoin and 90% in Litecoin and Ethereum.
Correct.
Okay. Do you think that you think it's an asset class? Is your analysis giving any signs of this relentless bear market being over?
I would say our algorithms called a lot of the drops last year.
Yeah.
The Bitcoin accuracy rate, by the way, this is what got us a lot of attention on the crypto side. And this is why Global Crypto Press is doing a 3-part series on us, is our accuracy rate right now with Bitcoin has been closer to 68%, meaning we're able to predict the price directions of Bitcoin 68% of the time. which is fantastic at trading.
Yeah.
And by the way, it's calibrated on purpose to be sensitive to the downside moves on purpose. So the algorithm itself has been calibrated to make sure people avoid downside moves, even if that means you don't get necessarily a 20% jump. You won't get a 20% drop. Structurally, I think longer term, Bitcoin is a very important asset class. It certainly was a bubble when this was ramping rapidly to 20,000. Not to be, I don't think that's much of a surprise given the media push on it in, what was it, November of 2017?
Yeah.
You remember that?
Do you think there was any coincidence with the top and the futures contract being launched? Because prior to that, it was very difficult to short.
No, I don't, because there's not much liquidity there.
Okay.
I would push back. If you were to ask me where I would say there's some, where I guess there was some pressure from structural or regulatory stuff, it would be the ETFs being rejected.
Okay.
I think there was an assumption that ETFs were going to be widely accepted in Bitcoin.
Right. So that may be the next phase of cryptos gaining, being more adopted once they have ETFs up there. You think that could be the catalyst?
Maybe, or more creative stuff. I mean, I don't know if your listeners care about crypto. We're actually discussing with a few different crypto exchanges right now about a pilot program where we're going to create a portfolio structure that embeds into the crypto exchanges where you can actually buy your own basket of cryptos.
Have you found any that you trust?
Crypto exchanges?
Yeah.
I have, but I'm very uncomfortable recommending them publicly.
Okay.
Just because you just never know.
Okay. I'm just saying I don't know where I would feel comfortable leaving a lot of money in that account.
I would never leave a lot of money on an exchange.
Yeah, unless they're guaranteed by or regulated or guaranteed by an exchange like, the CME.
Right.
Okay.
Well, you're going to get a joke out of this. I have all my crypto spread across about 10 different wallets.
You know what? That's what I hear from a lot of people. Are your wallets made of leather? Stephen, I'm only, you're talking
one of them.
you're talking to an ARP, an ARP guy. Stephen, I'm so glad you came here. This is a great resource for people really interested in the equity side, option side, and crypto side. And, it's probably one of the more in-depth resources to really break things down instead of just looking at candlesticks to really get insight into what you're doing before you click your mouse. So thank you for coming here today and edifying the community. And I appreciate it. And I want people to know they could follow you at Quantalytics RES. And I believe that's also with the www in front, your website. Is that correct, buddy?
Yeah, the website is www.quantamize.com.
Okay.
You can follow us on YouTube. That's Quantamize TV, or you can follow us on Twitter. That's at Quantalytics Res.
Well, I wish you continued success. It sounds like you're in a growth mode like mushrooms, exponentially. Yeah. And I could tell a lot of hard work went into this. And I wish you nothing but success going forward. Glad that we met, and perhaps we could do this again down the road and dig into it on an even deeper level.
Absolutely. Thank you very much for having me on. It's been a lot of fun.
And what do you charge per hour to be a bodyguard? Because, I have a lot of groupies and I need, some protection.
For you,
huh? You give me a discount? All right, buddy. All right. So my trading warrior brother, Stephen Mathai Davis, thank you very much for being with us today. And remember, everyone, don't just count your pips, count your blessings. We'll be back tomorrow. See you in members chat. And don't forget to check out Stephen on Twitter and his website. Thanks again, buddy. Good hunting to you.
Thank you.
All right, everyone. So that's a wrap. Adios. See you in members chat. Hope everyone enjoyed. You're very welcome, Neil. You're very welcome. Thank you, Tom. And thanks again, Stephen.